G'day, ladies and gentlemen. What a glorious day. Joining us today, we have one of the world's lead Bitcoin OnChain analysts, James Check from Check OnChain. We've seen billions of dollars scoop up these ETFs lately in the last few months with very little upward moves. I've got a few questions about why this is, if the stock to flow and power law are useful for the cycle, and where we can expect Bitcoin to go. James, such a pleasure to be able to have you join us today. How are you this morning, mate?
G'day, mate. It's good to be here. As I said before we started recording, I'm a bit dusty, but how else would you do it?
Absolutely. It sounded like you had a pretty good afternoon yesterday. Let's dive straight in. Like, it's a question everyone wants to know. I want to know, billions of dollars have been buying these ETFs. Bitcoin at the start of the year had a massive big rally, doubled in price basically, and now it's done nothing since then. What is going on, and what are you sort of seeing at the minute?
Yeah, it's a funny one, right? So, like, you know, I've seen so many comments of people like, how can we have 1.4 billion over the last couple of days flow into these ETFs, and the market basically has, you know, it's at 71K, right? And I would kind of lump this into a bucket of, I think people are kind of forgetting how big Bitcoin actually is. So when you look at these, you know, $1 billion, it was 886 million on Tuesday or Wednesday. When you look at the size of that, it's like 0.3% of the market cap, right? So it's very, very small in terms of like aggregate scale. And the other thing is that the ETFs, they are only like 20 to 30% of the market, right? So I've done a whole bunch of studies trying to look at this and actually sizing up how big are the ETFs on trade volume, on like inflow volumes, all these kind of things, and comparing it to Bitcoin's size, like realized cap and market cap and all these things. And essentially what we find is that long-term holders, right, the people who are long-term hodlers, they sold 70% of all of the coins that were sold, right, during this run-up. The ETFs from GBTC was only like 20%. So what people don't realize is the ETFs are still a minority factor. I mean, 20, 30% is still big, right? We're not kidding ourselves here. It's still a meaningful chunk. But it's not 80%. Everyone's looking at the 20% and being like, why isn't market doing what I think it should do? And they're forgetting that there's 80% of the market, which is the classic spot that has been literally Bitcoin's up until the ETFs. That market is still ticking along and doing everything it's always done. People take profits, but also we're consolidating below the all-time high, guys. People are bored. People are eating each other. Like, it's amazing that we are consolidating at 71K and people are angry. It's like, what is going on, guys? It's wild.
Yeah. Every time I see Bitcoin green on the screen behind me when I go live, I'm die a little bit inside. I'm like, it keeps getting more expensive. And that's the way that I see Bitcoin. But then you jump onto like X or Bitcoin Twitter, and everyone's like, why are we not at $100,000? I was promised this Omega candle, and like, hey, like, chill out. So what we're seeing, or what you were saying there, with 80% of long-term holders are making up that sell pressure, are you starting to see that sell pressure come down now that we are sort of in this sideways consolidation period?
Yeah, absolutely. So basically this consolidation, what we've seen over the last, since March, so let's just say the last 2.5 months, it has been a textbook correction. Like, you actually couldn't ask for a more beautiful crossing T's, dotting I's correction. We've seen long-term holder spending slowing down. We've seen all of, like, when I look at on-chain data, you kind of look for micro capitulation. So you want to see the guys who bought high, panic selling low. This is kind of like the nature of the beast. And we saw all of it. Everything, like, long-term holders have slowed down their spending. There's a whole lot of dynamics at play, right? I'm going to do a write-up today that covers this in more detail. But overall, they've taken their foot off the gas, right, of their sell side, which is good. It's going to relieve that pressure. But at the same time, you know, we had 18 months of just uninterrupted upside. When you have 18 months of uninterrupted upside, 6 months of sideways is not that, like, everyone should be very, very prepared and expecting that. So I call it chop solidation. I think there's probably I honestly think that there's like a coin flip between we're just going on to new all-time highs. I mean, first things first, the chart looks fantastic. Like, if you look at it on a monthly basis, Bitcoin wants to go higher. So at any kind of meaningful time frame, Bitcoin wants to go higher. However, sometimes you need to take out some people out of boredom, out of like going levered long at 71K only for us to go to 65. Then we go to 80, right? Markets are really, really cruel. So a little bit of chop like just chopping around on the order of months, I would honestly flip a coin and say we're going to all-time highs in the next week, and the other 50% is that we're going to chop around for another 2 months and just make everybody get sliced and diced, and then we go to 80K. So the thesis is correct, but markets need to like wash out everyone who thinks it's going to happen tomorrow so that it happens the day after, but they're not on board. It's just the way markets work.
It's sort of that Max Payne. I remember watching a video that you did when you were working with Glassnode there. It's probably like 3 or 4 months ago. And you said, we're just going to go into a sideways crab choppy market, and it's played out exactly like that. I don't know if you've got any charts that you can bring up what you're sort of seeing on chain to be able to explain like how you see these things, where this data is coming from. You just said that when you look at the chart, it looks like we're ready to make all-time highs, but it's a 50-50. Like, what are you seeing? How do you see this? And maybe just like a 101 basics or like really simple foundation of what you see, what you're looking for, and how you project that into the future.
Yeah, for sure. I mean, I'm just pulling up a post now that I went through so I can just remind myself. But yeah, essentially there's a few things, right? So there's only actually one technical indicator that I use, right? I don't really use all the RSIs and MACDs and all that shit. The only one I use is called the choppiness index. And it's actually, it was an Australian bloke who came up with it, which is why it's probably pretty useful. He was a commodity trader, and the choppiness index has no direction about it. And that's what I actually like about it. It's not telling you this is bullish, this is bearish. The best way to think about it is it's essentially the fuel tank. So markets go through this process, and it's really important that people get these like foundations right. Range expansion, meaning like a rally or moving to a new price range, leads to range contraction. So when the market has moved, it then needs to digest that move. It takes time, right? That's what consolidations and corrections are. So, and likewise, when you've gone through a period of consolidation, it's preparing the market to move again. So the choppiness index, you can look at it on, and you should look at it on like the monthly, the weekly, and the daily. So it's a big time frame kind of setup. The longer that the market has chopped around in the same range, the higher the choppiness index will be. It's basically telling you you're ready to go. It's time to move. But if you look at it, the choppiness index as it stands today, the weekly is nicely recharging. So on a weekly basis, the market's ready to go somewhere. And usually that can be enough. But on the monthly, after 18 months of going range expansion, just going up to the upside, it takes a period of months to chop around and like recuperate that time, right? So on the monthly basis, it's very, very possible that we may have to continue chopping. And by the way, you can also recharge by pulling back, right? Because when you sell off, you're essentially trading within the previous rally, right? Within that range, and corrections wash out people, right? It gets you closer and closer to seller exhaustion in a faster time frame. So and I'm not saying we're going to have to necessarily correct, but my big takeaway here is that on the weekly and daily, the price looks like it wants to move. Choppiness index tells us we've got a full tank of gas, but on the monthly, it's just not there yet. So, and that doesn't mean we can't move, right? These things are all about probabilities, but it also tells me that I'm not ruling out by any stretch a probability that we've got 2 or 3 more months of just chop, because that would fully recharge the monthly, and then you're ready to go, right? Then you're talking about 100K, but like it takes time, and people are not patient. And the other thing is that people think markets owe them something. They do not. Markets don't owe you.
They owe you Max Payne.
Absolutely. That they do not operate like an ATM. And markets just remind people all the time that it ain't that easy. Yes, Bitcoin's going higher, but the question is, did you make it by the time it goes up?
Yeah, man, it's, I watch a lot and I listen to you a lot, and it's pretty amazing to be able to, like, let's take a step back. You went into engineering, and your professor said most people end up in finance, and you thought, no, this is never going to happen. And obviously you ended up in Bitcoin, which is like the most pure finance that's ever existed. What like benefit coming from an engineering background has allowed you to come into the Bitcoin space to be able to have such a level head going forward? Because like you're saying, most people, when they see this chop and stuff, they're getting shaken out. But like people like yourself, where you've got a fairly solid foundation and reality, and then you bring that over to the Bitcoin space, it just allows you to see it a little bit differently. Is that because you are diving into the on-chain data and like the price charts and things like that? Or is it just like the lessons that were learned through the engineering that allows you just to have that groundedness with what's going on?
It's kind of all of the above. Yeah. So I think so my particular form of civil engineering was geotechnical. So what that means is anything to do with the ground, basements, tunnels, mines, footings, like everything in the ground. Now,
yeah,
the world of ground engineering is very different to the world of of like structural.
Yep.
Because as a structural engineer, now I'm not going to, the structural engineers will hate me for saying this, but you've got a blank canvas. You can put steel and concrete, which we know how they operate very, very well, right? There's textbooks on how steel is steel. It always acts like steel. You've got an empty space and you can put steel and concrete where you need it. Ground engineering, I get whatever the fuck Mother Nature gives me, right? It just is what it is. And the other thing that's interesting about ground engineering is the ground is already there. You're not putting it in the space. You have to actually create space within something that's already there. So it's like an inverted problem. The stresses are already in the ground. You're going to disrupt what's already in place. Now, the other thing about so that in that instance, right, there's a lot of uncertainty and risk. And just to really highlight that, one of the projects that I worked on was the new Martin Place station. Now, that was tunnels underneath one of the most heritage buildings in Sydney, old school bank vaults, super heritage tiles, all that kind of shit, a floor full of traders who just like, you can't disturb them because they're making too much money, all this kind of stuff. And one of the footprints of the buildings, right, 2 buildings and a basement, 50 by 50 square meter and 30 meters deep. That's 180 million kilograms of shit that we've got to dig out of the ground, right? 180 million kilograms. In order to design that, we get 5 maybe boreholes, and they're like 50 mil diameter. And if you actually do the calculations, right, that's something on the order of, right, 5 boreholes, 50 mil, 30 meters deep. It's about 0.00039% of that 180 million kilograms. That's all I've got to design off. So there's a lot of like interpolation. You need to think about, how did the rock get there 1 million years ago? And you got to think through all the different dynamics. And the other thing is, like, because you're designing off so little information, there's a process of interpolation, but there's also a process of being really flexible, right? And really, really, you can't design it being like, well, if it's not this rock, my building's going to fall over. You have to be designing it so it's flexible enough to deal with whatever the ground may be there when you finally get down. So anyway, bring it back to markets. Markets are all about uncertainty. They're all about incomplete information. And with world of on-chain data, sure, I'm missing what's going on the spot exchange. I don't know what the whales are doing over there. But it doesn't matter, because you learn to have a flexible enough, I guess in engineering it would be a design, but in markets, it's your thesis, right? My thesis of what I think is going on under the surface. And all I need is to try to find enough information to prove or disprove and continue to evolve that thesis. It's about having that flexible mechanical thinking of like, what am I looking for that would concern me? And if that's not showing up, then that's good, right? If the things that I'm concerned about, and I understand the mechanics, right? What's going to cause a bear market? Too many people buying too many coins at too high of a price. So therefore, I go to my toolbox and I say, well, how can I look for when the price corrects? How can I see when lots of guys suddenly go from in profit to in loss? That tells me they bought too high, right? And then you look for like those risk thresholds. And that's kind of the way I think about this stuff, right? I've got a thesis. I've got things that I look for that's going to concern me. If I don't see them, then my incomplete information is probably press on, right? Probably no issue. But if I do start to see those things manifest, then you flip your thesis and go, well, maybe this is actually a bear market rather than a correction.
How interesting. So that obviously gives you a huge advantage, I guess, for the rest of us that didn't have that solid foundation for the markets. We start to look at things like the stock to flow, the power law models, the fear and greed index. Okay, now I'll share my screen, and this is a chart that I saw this morning. So this by Giovanni. This is the Bitcoin predicted Bitcoin price movements, just going up and to the right until roughly October, November 2025, and then it comes down to lower than where it is now. Is this type of thing useful for people to, I don't know, buy, stack and chill, and then maybe sell on the way up? And, if they're looking at this chart, and then they can get it much slower than what it is now.
Am I correct? Am I correct that this is basically looking at the price, like predicting what the price is going to do over the next, out to 26? Is that what's going on here?
Correct. Yeah, that's exactly what's happening.
Yeah. So my advice for people watching is don't use shit like this, because my problem with stock to flow and my problem with stock to flow is a different animal, because the model is also shit. Right. So statistically speaking, it's dog shit. So there's actually nothing for stock to flow to stand on. So let's put that in a bucket, because that's not even worth time. The power law, there's obviously been a lot more work done on it, and that's fine. It's got a lot more rigor to it and all that kind of thing. The problem is the future is not predictable. And anyone who tells you that the future is predictable is lying. It's just, no one can do it. We've been trying for infinitum. No matter how many times human beings have tried to predict the future, it turns out we're not very good at it. Otherwise, people be a billionaire and retire. So the truth is that the markets are unpredictable. And any kind of model that's saying like, this is what the price will do, is bollocks. And my real concern with it is that it promotes lazy thinking, right? So what a lot of people will do who are inexperienced, and there's inexperience, there's also people who don't spend the time, that don't have the time, whatever it is. There's a whole lot of reasons why people won't go and do the level of like deep mechanical thinking that even the author of the power law, right, he's done a lot of deep thinking about this, and that's great. It's awesome. He's written about it, all that kind of stuff. The problem is the people who this is going to attract have not done that work. It's very, very easy to get caught up and say it has to go to 200. This is what happened with the stock to flow model. It's the same marketing problem, let's call it. People believe that it's preordained that we have to go to $200,000, and they make life decisions with that as an expectation. And in 2021, that was people taking on enormous leverage, and they got wiped out. They lost everything because, and again, that's their own decision, fine. But you also have to realize that we all want to get rich quick, right? It's just like a nature of humanity. People want to get rich quick. And these models promote lazy thinking in the sense that people honestly believe that it's preordained to go to whatever price it is. And when it doesn't, because at some point it won't happen, people are going to get hurt. And that's the problem with this kind of stuff, right? Now, again, people are then going to look at me and be like, oh, look, this guy just sells his own voodoo charts. Like, okay, that's fine. But the way I like to look at markets, and the reason I like to use on-chain data, it's on the hard right edge. You will never see me give a price prediction, right? I don't say Bitcoin's going to 80K or it's going to 60K. What I will say is, here's the conditions that we're currently in, right? The probabilities favor us going higher, lower, left, right. Don't be surprised. And that's the whole reason why my tagline for Check on Chain is, we're your Bitcoin personal trainer, right? And the idea there is to help people be prepared in case something happens. So when we do get a sell-off, it's not a surprise. People are like, okay, I kind of expected this. And you can then look at the mechanics of that sell-off. Have we seen too many people fall into a loss? So, it's more of a let's deal with the here and now. If you want a price prediction from me, it's like, well, how many bars of gold? And I did this at the Bitcoin Live conference, right? How many bars of gold are there per Bitcoin? Turns out that's 10.8 kilograms, which is about 1.2 million Australian dollars. There's my price prediction, right? Bitcoin's going to overtake gold. It's going to 1.2 million, assuming gold never goes up again, right? Because Bitcoin is better than gold. Fundamentally, you can speak to that kind of thing. But how long is that going to take? Lord knows, right? It could be 10 years, could be 20 years, could be 50 years. You don't know. But that's the problem I have with stock to flow. Stock to flow is both shit and dangerous. Power law has the potential to be dangerous because people don't do the work that has been done behind it, and that's fine. But it risks people not thinking and making life decisions that are impactful for their life because it's easy to draw a line and say the Bitcoin price will go here.
Yeah. So why is the stock to flow model bullshit? Like, what is it? What makes it a bad chart? What makes it a bad indicator?
Well, first things first, it has, I mean, the problem is that the deviations that it's made, right? And the author will continue to say that there's a whole lot of problems here. The author will continue to say, oh, look, we're back in the +1 standard deviation bands. The problem is that those bands basically say that Bitcoin can trade anywhere between $4 and 4 million, and the model's correct. I'm sorry,
Okay.
but the range on that is so ridiculous that it's useless, right? Because the problem is, if you look at this thing, you never need to look at this chart ever again, because the answer is Bitcoin's going up. So just buy, right? Because that's the most information. What are you going to do? Wait for it to get to a certain line? Like, it's useless information. The other one is that statisticians who are far more capable than myself, right? I'm not a statistician. I'm an engineer. I think about things as like a machine. Guys who really understand correlations, they went through the whole exercise. In fact, the same guy who introduced the co-integration, I think it's co-integration. There was something that was basically saying that, you know, it was a whole hoo-ha about why stock to flow was, you know, absolutely preordained to happen. That same guy came out and goes, you know what, actually, after running these like statistical checks and validity checks and whatever else it was, goes, yeah, actually, it's completely spurious, which basically means there's about as much connection between the stock to flow and the amount of times that you have a coffee in the morning. Those two things have about the same amount of correlation to the Bitcoin price. So, you know, it just falls down on so many levels. But again, really, really lazy thinking. And the problem is that the author has been told by many, many folks, and he just rather than addressing those concerns, he doubles down, makes a new version of the model, and blocks them. Right, which is, again, it's a sign of something ain't right.
So it looks like it's more of a money-making adventure from that perspective, in that regard. And, you know, when I first came into Bitcoin in 2019, the stock to flow was a big part of the last cycle. It was absolutely everywhere. And we're starting to see that with the power law as well. One of the things, like, how useful is the fear and greed index?
It's useful to a degree, in the sense that, like, it's measuring many of the same things that on-chain data is doing, just in a less rigorous way, I would say. So I mean, look, sentiment is a big part of markets, no question. I don't exactly recall. I'm pretty sure it uses like price volatility, which is a big part of it. It uses like sentiment on Twitter. I don't know. There's a bunch of inputs. I can't remember the exact weightings of them, but it's useful in the sense that it's telling a story that is important to understand, which is market sentiment. How it's doing so is a little bit of a black box. You know, it's a finger in the air type metric, right? So it's, you know, directionally it's probably okay. In terms of, like, you know, is it a useful thing? Do I check it? Never. Right. That's probably how I'd frame it. Okay.
So, like, I guess everyone that's been Bitcoin for a while wants to increase their Bitcoin holdings. They never want that to go down. How do you approach that? Like, what do you think the best way for the average person that doesn't have your experience, that can't really read on-chain, what's the best way for them to be able to increase their stack? Like, what, you know, what sort of, maybe not advice, but what would you say to that? How would you speak to that?
Yep. No, it's just a good question. So I personally use on-chain data to buy as low as I can, right? I have become acclimatized to Bitcoin being above 100,000 Australian dollars. It's a pretty tough transition, but we're there. That's where we are. If there's like a set of actionable tools, it's essentially I think most people should become familiar with two metrics. Well, I guess it's three. Get familiar with the realized cap, because the realized cap is the backbone of so many powerful insights. Once you understand why the realized cap is important, and I've done plenty of work covering this, once you understand the realized cap, everything else downstream of that makes a hell of a lot more sense. You then need to become familiar with the short-term holder MVRV ratio, and I'll talk about that in a second, and the short-term holder SOPA. Right? So what are those two things? They're actually system metrics. MVRV is telling you the unrealized profit or loss. Like, you know, if it's 1.2, that means the average short-term holder is up 20%. If it's 1.4,
Okay, yep.
they're up 40%. If it's 0.8, they're down 20%, right? They're underwater.
Yep.
So basically, it's the ratio between price and the short-term holder cost basis. If you're a DCA hodler, you want to be buying as close to or below the short-term holder cost basis as you possibly can. And what that means, short-term MVRV as low as you possibly can. In a bull market, it will regularly find support at the level of 1. And in a bear market, we'll break through that and it will start finding resistance at 1. Why? Because people buy the dip at their cost basis. If you think about it, right? I know I'm not going to be able to buy Bitcoin at 30,000 again. It's just not, it's not on my radar of things to happen. So I've accepted that something, the short-term holder cost base is like 60K right now, US. So if the short-term cost base is 60K, that's where people have seen value. They've stepped in and bought that level, right? That's the new normal. So in a way, by waiting for that opportunity to get in, not low as you would like, but as low as you're going to get, short-term holder cost base is a good place to do that. And MVRV is how you track it. Now, when we break below, it can flip over and become resistance because now people want their money back, right? I don't like this correction anymore. This bear market's horrible. I'm going to take whatever exit liquidity I can and I'll sell the moment that like we get a bounce, I'll take it. So it's like an inverse. Now, SOPA is the spent version of that metric. It's not telling you the unrealized, the paper profit or loss. It's telling you the locked in profit or loss. So when lots of people are taking lots of profit, probably not a good time to be stacking sats. So if short-term SOPA is very high, you're buying off some guy who's taking chips off the table, which is always the case technically, but maybe that's not the best time to buy. If on the other hand, and particularly with short-term holders, the reason why that cohort's important is because they're the only ones who can be in loss right now because we're at pretty much all-time high. So the short-term holders being in loss, if they're selling their coins in a loss, who are those people? People who bought the tippity top. And you actually want to wait for pain in the market. You want to see the guy who bought at 73K and held it down to 57. Then he capitulates. That's the candle that you want to buy, right? So just to kind of round all that together, try and buy as low and as close to the short-term holder cost basis as you can. Try not to buy when people are taking a lot of profit off the table, probably getting a bit frothy, highly likely we're going to have a correction. Wait for those people who did buy high to sell low. That like trifecta of things will set most hodlers up to just get better DCAs. I think that's like the framework that I like to use.
Yep. So if I go into CoinGecko and bring up the Bitcoin price chart, I can't see any of these MVRVs, SOPA. Where are people getting access? Like, how do they see these type of things? How do they use these tools?
So my website, which is checkonchain.com, it's actually charts.checkonchain.com, but too many dots.
I'll link it below.
yeah. If you go to checkonchain.com, there's a section at the top called charts. Literally in the top row of charts, I have my short-term holder. The set that I just talked about, they're all up there.
Do you want to share your screen?
I
show us?
can. Hang on. Yeah, let me. Hang on, I'm traveling, so I don't have my my usual setup.
Yeah, it's a pain. Did you say checkonchain.com?
Checkonchain.com. Yeah.
Cool. I can bring it up here. Let me. This page, right one?
Hang on. Yep. So got the top left charts.
Oh, sorry. It brought it up in a new tab. Let's go.
Yeah. So on the top right there, see those short-term holder indicators, MVRV and SOPA. Those two.
Where are we seeing this? Sorry. Oh, here. Yep.
Top
MVRV.
On the right. Yep. Those two. You pull up those two. That's essential. I mean, these are the essential tools. If you can get your head around these two, it's just it sets everybody up for so much more success, right? And I keep wondering, like, so this one here. I keep wondering why Michael Saylor doesn't just like buy the short-term holder cost basis. Like, don't buy high. Just wait for it to be at or near the short-term cost basis. If he just did that, he'd improve his position substantially. So basically, you can see in 2017, you can see in 2020, you can see right now. See how this oscillator continues to find support at that level of 1. It keeps bouncing off that level. That's people buying their cost basis. right? When it breaks below, it stays below. Bear market, right? So blue is bear, orange is bull. It's like that's about as hard as it needs to be.
That's absolutely incredible. I'll link that below for everyone. One question, you brought up Michael Saylor. Then when he buys and he buys big, he's also not moving the price. Like, can you explain or speak to that a little bit more? Like, how is it just because it's such a small amount, or has he got a strategy running in the background to be able to buy billions of dollars worth of Bitcoin and the price only pumps after he announces it?
Look, there's a whole lot of factors here, right? So people are always trying to do whale watching. Whale watching is a great people love to meme about it. They'll look at Saylor, they'll find it was Mr. 100 a little while back. There's always some guy who's like, we need to chase these whales. The truth is, right, for the vast majority of people, when you're tracking a whale, you're probably looking at an exchange. So the problem with whale watching, and I wrote a whole post on this, the problem with whale watching is that there's like 2,000 of them in terms of like wallets with 1,000 Bitcoin. As you're looking at those wallets, most of them are going to be exchange wallets, right? So if it looks like Mr. 100 is buying 100 Bitcoin a day, what if that's a deposit? What if it's an exchange hot wallet and people are actually selling 100 Bitcoin a day, right? It's probably a custodian breaking down coins. It could be an ETF. There's a whole lot of shit that's like, there's so few of them and they have so many coins. And they're also probably an institution of some form that like the signal is just not there. So it's very much not worth it. So that's kind of one frame of reference. The other one is if you think about the way that whales actually operate, right? If we're talking about Michael Saylor or any big trading firm, if you want to buy $1 billion worth of Bitcoin, you need somebody to sell $1 billion worth of Bitcoin, right? If you're trying to open a very large position and you believe that you're right? You think that you want to buy a bunch and it's going to go higher. You need $1 billion worth of people who think it's going to go lower. That's the nature of the beast. So a lot of these guys will actually just sit there in the order books and allow people to sell to them. Now, if you're, and this is how markets work, by the way, if you're a Goldman Sachs and you want to open $1 billion position, you will actually start selling because you want to push the market lower because you want people to panic and start to sell out their coins. So a lot of these guys, that the trading desks will actually use markets to move towards what they want. And of course, there's another guy in there who's doing the exact opposite. So it's like institution on institution warfare in the order books. This is why price chops around. And it sometimes it feels random and all over the place. And a lot of the time it is. If you get down into the minutiae of like the hourly chart, a lot of it is noise. It's just chopping around. It doesn't make any sense because these kind of activities are happening. People are like, oh, it's market manipulation. It's like, no, that's markets. That's just markets. It's how they work. If you have capital and you want to achieve a goal, you're going to use the market for whatever tools you've got available to you to achieve that goal, right? If you need to buy, then you may need to sell a bit to actually get the market to move in that original direction and get the crowd moving in a particular way. This is just how they work. It's the nature of the beast. So a lot of people get too fixated on like the micro details. What really matters is over the big picture, are coins going off into hodler wallets? Are they actually getting accumulated and just held? And then over time, there's just not like you need that marginal demand to come in. That's why Bitcoin will chop around for a long time and then teleport, right?
Yeah.
Next thing you know, you wake up, we're at 80K and that's it. We're never going back, right? That's kind of the nature of how Bitcoin moves. This like slow rally sideways is super healthy, super healthy price action.
It's like the slower it moves, the better and the more sustainable. Like that just sort of makes sense.
Exactly.
One question that I have, like we see a lot of charts, especially on X, that Bitcoin on exchange is at like all-time lows. It just day after day, week after week, all-time low Bitcoin on exchange. Over Bitcoin's history, or say even the last 10 years, is there sort of like an amount of Bitcoin that will always be available, or are we really seeing that supply shrink more and more over time? Or like even though it's at all-time lows, if you to extrapolate it out, it's still, I think, like 1.2 million coins or thereabouts. You can probably speak to that better. Say it's like 1.2 million or 2 million. Like, does that even really matter?
No. So much the same as whale watching, much the same as stock to flow, exchange balances. Stop looking at them. They're useless. They're not useful for what people think they're doing. And the reason why a lot of that decline is, if you actually remove Coinbase from that equation, from the exchange balances are like flat or increasing, right? So why is Coinbase seeing this like weird stair-stepping decline? It's because the 500,000 Bitcoin that they have on their exchange wallets, a lot of those coins are going into their custody arm. And that is just up and to the right, moon mission, right? They've got ETFs in there. They've got GBTC in there. They've got institutional holders in there. They've got all sorts of people. So the problem is that those coins are still inside Coinbase. They're just in a different arm of Coinbase. So yeah. And look, a lot of people will focus on exchange balances. I have not seen a great deal of signal coming out of exchange balances. I think it's a macro story. It's also subject to all the data heuristics, right? It's multiple people's full-time job to maintain the algorithms that go and find those wallets. And whilst they can do a fantastic job, there's still wallets that get discovered all the time. All the time, there's new wallets being found. So it's like, how much of it is actually being captured? It's always a question. What people don't realize, so the counter argument to this is that exchange flows are very useful, because what we're looking at is coins being deposited and withdrawn. What a lot of people don't understand is every single day there's like multiple $1 billion being deposited and multiple $1 billion being withdrawn in BTC. So, and that's every single day. So every single one of those coins being deposited and withdrawn, there's billions of dollars of coins moving around. Every single one of those carries an on-chain signature. Who held it? How long did they hold it for? What was the profit and loss that they locked in? That's why on-chain data is so powerful, because you're looking at people buying, selling, and moving coins in and out of exchanges. And exchanges represent like sometimes 50, sometimes 80% of all transaction volume is deposits and withdrawals in terms of the on-chain footprint. So it's an enormous amount. And that's why on-chain data is useful, because 80% of transaction volume is people buying, selling, depositing, withdrawing. Now, when you see big withdrawals, right, this is another kind of watch it. When you see any on-chain data, in fact, any data, generally speaking, but we see this all the time with on-chain, people will see like a whale wallet that just suddenly moons and it goes like up. Oh, look, whales bought 1.5 million Bitcoin. It's like, no, bro. There's an exchange wallet just happened to move into that denomination, right? It's a labeling error. When you see vertical moves in data that just look unnatural, it's probably unnatural, right? A lot of people will look at a huge exchange outflow. No, they move coins from a hot wallet to a cold wallet, or a cold wallet to a hot wallet. There's something going on internally. Kraken didn't see, I can't remember what the number was. Kraken didn't see a $16 billion outflow. The algorithm found another wallet. That's what's actually going on.
Interesting. So that's on-chain data, the exchange data. What about the coins that the miners are holding? Is that useful to look at, or is that sort of the same thing?
Miners, essentially, for the most part, they sell everything they mine. Yeah, there's some miners who hodl on, but like, and I ran a study recently to look at how big issuance is, right? The new coins being mined. How big is that compared to the rest of the market? It's 1,600 times smaller than futures trade volume. It's 800 times smaller than spot trade volume, and it's 50 or 100 times smaller, depending on which way you want to measure it, 100 times smaller than the ETF trade volume. So like, we're talking about something that is so small that you actually wouldn't even notice if it disappeared. So miners are a part of the market. They're an important part of Bitcoin. Their sell side pressure is insignificant compared to the rest of the side. Just the sheer scale of this market, it's much, much bigger. It's the same reason why 880 million in ETF inflows, 880 million is a big number. It is. But it's also 0.3% of the market cap. You know what I mean? Like that's for us, it's huge. But Bitcoin's a $1.5 trillion asset. It's massive, right? If you compare it to the realized cap, 580 billion, right? What's a billion? 1,000 millions. So we're talking about like big numbers here.
Yeah. One thing that I saw, I think as Nvidia, they've hit $3 trillion market cap, and we're at 1.3 million. Obviously, Bitcoin's more important than Nvidia in every single way. But what allows, say, Bitcoin's market cap or a stock's market cap to go, because $1 trillion is a huge amount of money, like you're just explaining. Like, how do we go? $1,000 billion. How do we?
Billions, 1,000 million.
Wow. So how do we go from $1,000 billion to $3,000 billion? Like how the hell's Nvidia do it when Bitcoin's superior technology? It's more useful in every single way. Like, people are just going in there because it's pumping, but Bitcoin's sort of much needed. It's actually money. How do we sort of have the same sort of price action if the institutions, when they come in with $886 million, aren't moving the price? Like, do the institutions need to come in a huge amount of retail FOMO, or like what's the catalyst? Like, how's it actually happen?
Yeah. So first things first, can you hazard a guess? What was the market cap of Bitcoin after FTX blew up? What was the market? Do you have a guess?
Like 200 billion, maybe 300 billion.
About 300 billion. So Bitcoin has added $1 trillion in market cap since the FTX bottom, right? So that's like a sense of scale. Bitcoin has done that. It has added that $1 trillion. I think the other thing that's important to note is when we're talking about the scale of large numbers here, Nvidia is already fully integrated with the financials. Like, it's a stock, right, on the US markets. The scale of money that is available to invest in this stuff, they've got, I mean, it's passive investing as well. So there's going to be all these stock indexes, and they kind of weight, depending on how big the company is, they put more and more weight on these things. So every single person, right, here in Australia, we've got our superannuation funds. And I think, I can't remember the exact numbers, but if they take 10% of our salary in super, 25% of that goes into the big four banks. So you can kind of back calculate and work out how much of Australia's income every single month just buys the big banks. It's the same logic here. Every single 401k is weighted to these indexes, and every single hedge fund manager and portfolio manager, their benchmark is the S&P 500. If you're not beating the S&P 500, why would I pay you a fee? I may as well just do it myself. Yeah. So a lot of these guys are buying Nvidia with big money, because if they don't, they're going to get fired, right? Which also comes to my next point. When you see markets do that, I mean, Nvidia chart is, I have no edge or idea about what Nvidia is going to do. But when markets just go vertical like that, what it doesn't do is build support. So if and when that market cracks, if and when, it will not find support on the way down, right? It, generally speaking, when you get vertical price moves like that, it can just sell right through it, right? There's no like levels, there's no history there, right? Bitcoin, on the other hand, where it's doing this stair-stepping pattern, the probability that we go back to 40K, in my honest opinion, is pretty low, right? It would have to take some kind of March 2020 style event, a thing, a catalyst. You'd need some kind of major shockwave, right? I don't think we're just going to like bear market down to 40K ever again. I think that's done. Yeah. Nvidia, could we see a 50% sell-off? Yeah, you absolutely could, because if everybody owns it, there's no one left to buy, right? So you get these moments where like everyone just realizes there's no air left in the room and you've got to fucking run. That's what can happen with this kind of stuff, and there's no support.
Do you reckon because the narrative around Bitcoin, it's a flight to safety, it's a flight to quality, when that inevitable sell-off, say with Nvidia, let's just on this example, happens, are they going to go into cash, which is being decimated and being inflated away? Or because of the story around Bitcoin, the narrative around Bitcoin, because what Bitcoin is, we may see Nvidia drop and that flow into Bitcoin, or we may just see the whole market come down because Bitcoin's been stepping up slower. It's not going to come down as much, but it'll be like systematically.
Yeah, I think Bitcoin and gold are going to have the same kind of experience, which is that when we get that sell-off, right? That's the other thing. Because Nvidia is basically carrying the entire US stock market, like 50% of the gains in the S&P 500 are from Nvidia. So because it's essentially like a one asset is like, those diagrams where it's like the tiny little toothpick that's holding up like a whole world of stuff. It's those memes. basically Nvidia's price performance is the only thing keeping the American economy from ticking over.
Yeah.
So if that cracks, I really think that everything's just going to take a bath. But at the same time, those assets like Bitcoin and gold will probably be the fastest and quickest to recover, right?
Yeah.
So I don't think that any asset's going to survive when that thing finally cracks. And again, who knows? Maybe it just keeps going. Maybe it's in a new paradigm. I don't know. But as I said,
I've got someone here. Can you give me 30 seconds? Can you just take over the show and the floor is yours, James?
Got it. Can do.
Legend.
Yes. So yeah, look, I mean, I don't know. I don't know what Nvidia is going to do. I have no edge in it. AI is strangely enough. I had my AI, I guess you call it like an aha moment recently, but it was in GitHub coding, right? So you've got GitHub Copilot, and it can basically write like you can type a comment, and it will then print the code for you, which is pretty remarkable stuff. Chat GPT and all that kind of stuff, I have not found a use case for it. So like, I'm really on the fence for how useful AI is going to be. I know it'll get there, but like I've had that kind of moment with like the coding side of things. I think that makes a lot of sense. But when I look at where we are, like what AI is changing today, and I look at the market cap of some of these things, it feels a bit divorced from reality. Who knows how this whole thing cracks out, but it's definitely it's an interesting dynamic. I mean, on the coding side, it's been remarkable how quickly you can write stuff, which makes sense. It's procedural, so I think it's going to fix a lot of procedural things. But whether it's going to fix, I think there's a lot of people making AI content, and I don't think there's many people consuming AI content. So that's kind of my general gut feel.
Mate, you are an absolute legend. Thank you very much. This is a super good question here from Greg. What happens if when the central banks decide to bend the knee and put Bitcoin on their books? El Salvador's already done that. So can we extrapolate that out? El Salvador is a tiny country, a very poor country, a very small country, and Bitcoin's changed their whole economy. But that's what Bitcoin's done for them. What do you see the central banks doing for Bitcoin if this was to happen?
Yeah, so I think my take on El Salvador is I think that the president has probably done a hell of a lot more than Bitcoin has. I think Bitcoin's it's a very nice wrapper. Its actual role, like, I don't believe that there's many people in El Salvador using Bitcoin day to day. There's pockets. It's a good thing. Obviously, their treasury has done very well. That's all good. But I think that a lot of it is the president's actions, and it's also brought, and rightfully so, it's kind of the first mover advantage. How many Bitcoiners have brought their tourism dollars to El Salvador? Right, very clever tactic. So overall, it's a positive thing. But I'm certainly measured in saying that Bitcoin has fixed their society. I think that there's probably some policies that have been made that probably have a lot more to do with that. Nevertheless, at some point, right, we will see banks. It will start probably below like if I kind of think about how this scales up, I suspect that there will be oil companies, energy companies that start mining using Bitcoin on a more like as a liquid version of settlement. I think that's probably likely because I do believe that gold is going to return to the global financial system as a level of settlement between central banks. I think that's going to happen a lot.
It's looking that way, hey.
Correct. So I think gold's going to get into that bucket, but also gold's a real pain in the ass, right? To move it around, it's a real pain in the ass. Bitcoin is not a pain in the ass. It's 10-minute wait time and 30 cents in fees. So it's to move whatever amount you want. So I suspect we will start to see Bitcoin entering the fray as a near-term settlement vehicle. And then once it starts being a near-term settlement vehicle, suddenly it's like, well, we kind of use this thing on a regular basis. Maybe we should just like have some on our balance sheet. And I think that's like how it scales up. Oil producers, once they get familiar, because mining is a great sidekick for them because they produce all the excess methane. There's all sorts of reasons why oil companies have this incentive. You've also got, countries in the Middle East, right? Saudi Arabia and the like, they're probably a bit more forward looking at some of this kind of stuff. I would also say that if you look at the age of leaders in the West, they're pretty old. If you look at the voting numbers that we've seen in the US recently on, Bitcoin related bills, they're mostly young people. The younger Democrats in particular are the ones voting for, and it's the older ones who are voting against. And the leaders in the call it emerging markets, tend to be younger, right, than leaders in the West. And I suspect there's going to be that factor will come into it, right? They have a bigger incentive to adopt Bitcoin. They have a bigger incentive to start moving their country in a different direction, right? So in the same way that, Bukele is a young bloke, he's moving the country in a different direction. I think we're going to see a lot more of that in emerging markets, and Bitcoin may well be a part of that whole shift. So it's definitely, none of this is going to be structurally bearish for Bitcoin, right? All of it's going to be constructive. You can see the path forward for it just growing from here. So that's pretty exciting stuff.
Yep. I'd like to see if you have any thoughts on the petrodollar agreement that ends in 2 days' time, as well as gold. You've got a history with gold. Just really quickly, I would like to bring up today's sponsor, the Bitcoin Way. Tony and the team there, the professional Bitcoin IT security team. If you need any help getting your Bitcoin off the exchange, like, that is number one. Don't leave your Bitcoin on the exchange ever. That is idiocracy. This team, they can work with you, very professional, help you put it in a cold storage into an air gap wallet, help you be your own bank, set up your own node. And they've got a new service here as well. To be a sovereign individual, become a ghost online with their Casper service. Totally disappear off the internet if you want to, and they can help you get a second passport as well if you want to move to jurisdictions that are more tax-friendly. With that last thing, moving to jurisdictions that are more tax-friendly, do you think that's... just really quickly on that, there's a link below, and it's the first 30 minutes is free. Just reach out and have a conversation. But with this, where people are, like, Australia's tax rate is insanely high. Like, I choose to live here. I enjoy all the benefits of the country. The right thing is to pay tax. It's the law. It's the right thing. You make a profit, you earn income, whatever it is, pay tax. However, they're exorbitant, and, people are pushing back. That's the safe thing. No, the safe thing is to buy, stack, and chill Bitcoin and hold that in self-custody. But as we see people like El Salvador, they incentivize people to go there with their Bitcoiners. Panama's got very favorable tax laws for Bitcoin. Do you see more countries like waking up, trying to bring Bitcoiners, because their purchasing power is going to increase forever? The longer you hold Bitcoin, economic purchasing power. Like, I think, like, from this conversation, what I hear the most, James, is Bitcoin is just going up into the right forever. Over what time frame? Like, indefinitely. What happens in the short term? Like, who knows? Who actually cares? Like, it really doesn't matter. But do you think, like, nation states, say like Australia, for example, they start to see people moving down El Salvador, Panama, wherever it is, and then they're like, oh, like, we're losing all these intelligent people. We need to change our laws. And could Bitcoin be this, like, Trojan horse that comes in and makes the world a better place for Bitcoiners, but also for everyone else? Because if they're, like, losing all these Bitcoiners or high net worth individuals for whatever reason, they need to lower the tax for everyone, which benefits everyone. Or they're like, no, it's nice having high taxes. We keep everyone as serfs. Let's just keep them high, and they're just happy to lose everyone. Like, how do you see that sort of game theory playing out?
Yeah, I think it's an important one. I'll just touch on the previous thing you said also about the petrodollar. So the petrodollar deal doesn't end. There is no end date. It just is the state of play, right? I think that was whatever that tweet was, where he's like, oh, it ends on July 12th or whatever it is. It's horseshit. It's just like, it's the way the world came to be, is the petrodollar. It's so yes, it was originally a deal, but now it's just the way it works, right? It's like, people aren't just going to stop operating under that kind of that system because a deal has a termination date. So that's the first thing. In terms of the tax side, I suspect we're about to go through two phases. The first one is that Western nations, which are heavily indebted, and they are going to be incentivized to keep capital at home. I think we're going to go through a period of higher taxes. Now, that could be inflation. It will be inflation. That's a tax. It could be capital gains. I mean, they're horsing around with unrealized capital gains, which I don't think will happen, but they might do it like we're talking about here in Australia, like taxing people's super that's over 3 million at a higher rate. It's like, well, 3 millions buys you
nothing.
A house, maybe. We're not talking about serious money here anymore.
Yeah.
So I think we're going to go through a period of higher taxes initially, And then you'll start to get a bit of a brain drain. And on the emerging markets, they're going to have an incentive, whether Bitcoin or any other kind of frame of reference, they are going to have an incentive to bring people to them, right? So there'll be a bit of a tax arbitrage. So I think, generally speaking, with these kind of things, you need to have the backlash before the response. So yes, Western nations may like try to reduce that kind of or stem the flow of people leaving, but it will only happen after the flow has happened, which means that the taxes and the rates of theft will increase before they go lower.
I find that pretty interesting because the people that are going to implement these tax rules, increase the tax, they're already high net worth individuals. So it's going to affect them as well. Or do they have strategies in place to be able to mitigate it because they're closer to the money printer?
I'm pretty sure politicians can set their own rules, right? Whether they adhere to our tax rules is probably different. But at the same time, it's the same as anything, right? I think inflation is the preferred tax because people can't reason about it. People think it's good, which is hilarious.
That's crazy.
Inflation is the preferred. It is. I mean, we're taught to think it's good. Inflation is the preferred tax. That's the way they're going to do it for the most part. And that's going to benefit high net worth individuals because they don't hold cash. They hold everything except. So I think that's the way it's probably going to play out.
Yeah. So like this year worldwide, sort of macroeconomic is like the biggest election cycle in human history. More elections taking place. It's roughly like half the world's population that are voting. Fairly often, like I feel like money printing is going to start up leading into that election cycle. If it happens in the US, I think it's going to happen here, which is inflation. If that happens like what we saw with 2020, when they started printing money, Bitcoin went from $3,300 or $3,600 to over $69,000. House prices doubled, like our house price doubled and stuff. The house is still the same. It's in worse repair than when we got it, even though we've been maintaining it. It's getting older. It's a wooden house, things like that. So it hasn't increased its value, but do you see that playing out? And are there like any signs or indications that money printing is set to come here?
Yeah, I mean, I think money printing is already happening, right? We're seeing rate cuts starting to happen. They're starting to ease policy conditions. I suspect that there will be accommodative into the election. I think going through the US election and then on the other side of it, I'm certainly going to be cautious around that time. I think that's where we could get some serious volatility because Lord knows what's going to happen when whatever the result, it's going to be it's going to be one to watch. Yeah, it is. So I think we'll get some volatility in and around the election. But I just think that there's probably more liquidity coming. I think they're easing policy rates. I think to me it feels like they're going to do everything they can to keep the markets functioning as stable heading into the election. That's my kind of general gut feel. Whether it's political or not, it kind of doesn't matter. I think no central banker wants things to get wobbly because it's a mess, especially not in an election year. There's a whole lot of dynamics at play.
Yeah. Is it real short-term thinking? Because if they start firing up the money prints, they own the hard assets, whether it's gold, silver, Bitcoin, real estate, stocks, they all go up. It decimates the lower and middle class. But over time, printing money is not sustainable and we go into like a debt spiral. But do they just not care because of the age that they are at and because they own the hard assets? Like, what do you reckon the mind frame is around that?
They've got a set of incentives, right? Like if you were put in their position and you've got all again, a lot of these guys and girls come from like classic economic training, right? Keynesian economics. They are given they're given a very, very shit setup. What do you do? What else do you do, right? If most of us are in that position, you'd probably do the same thing. Right? They're just trying to keep the wheels on this car, and that made a hell of a lot of mistakes, right? Inflation being transitory and all monetizing the debt, but at the same time, there is no other way out. The only other way out, like if you actually run through what it would take, the only other way is austerity. And that means that like you have to halve all of your social programs. You take away all your pensions. You got to take away all your medical benefits for a generation that's is in the process of retiring. It's just not going to happen, right? That people will vote against that. So it's one of those things where and Jeff Booth talks about this. We vote for more inflation. we vote these people in because the guy who's going to do the hard road isn't going to be in office for very long. You're going to kick him out. And it's just like they've got a set of incentives that they're kind of wrecked no matter what they do. And that's just the way it works. And this is why we go through these cycles every 100 years.
It's insane. Like, thank God truly for Bitcoin. We're so blessed. Like, going back to the super, they want to tax over $3 million. That $3 million, especially if they fire up the money printer, is going to be, if you had a $3 million 4 years ago, you buy about $1.6 million worth. You have $1.6 million worth of purchasing power today. If they keep inflation up, that's going to keep going down and down and down. Like, then what do they do? Because you're talking about we've got a lot of people retiring. Is it UBI, or pension, and then that leads to more money printing, more decimation of the dollar? Like, it really doesn't. It really doesn't make sense. And like you're saying, like they believe this stuff, but there's so much information out there. Like, all Jerome Powell needs to do is read the Bitcoin Standard. Like, I'm sure he hasn't, or if he has, then it's insidious. But like, with all the information that we have in the world, how are they still buying that belief that it still works?
Well, I think they don't really have a choice, because you got to think about the fact that, like, all this debt is actually some other guy's asset, right? And this is the exact same reason why this whole all the talk of de-dollarization, it's a trend that's happening, but it ain't close to de-dollarizing, because all these countries have debt denominated in USD, and that debt isn't the United States, that they owe it to each other, right? There's all these different countries. Like, the reason they can't leave, it's Hotel California. You can't leave because otherwise you blow up your own balance sheet. So, like, the problem is, if the US just, like, suddenly, I mean, if you kind of imagine it, they're like, all right, we're going back to a gold standard. Yes, the gold price will moon, but what about all the bondholders, the ones who finance the US government? What are they going to do? They're going to never do it again, right? You've just lost your financiers. So these countries don't really have that many choices. And this is why inflation is the preferred and most likely route, because people vote for it. It's a slow and insidious way to get out of these problems. And ultimately, they need to whisper the bond market to sleep and just have them take the pain, right? Massage the CPI numbers lower so the bond market doesn't panic, because it's being slowly but surely taken out to the woodshed. This is going to happen. This is what inflation and financial repression is all about. Because if the bond market sends interest rates up to like 10% on the 10-year, the world implodes. Like, it's over. So they're kind of in a rock and a hard place, and I wouldn't want to be them, that's for sure.
Yeah, mate, I absolutely agree. So we saw Canada, the ECB, and there's one other country that cut rates in the last 2 days as well. The rest of the world probably going to follow, but does that last forever, or is it just a short time? And then do you reckon they send rates back up to like 16, 17, 18% that we have seen in this country before, or they literally can't do that anymore ever again because they're going to put max pain?
The debt's too big. The debt's too big. They can't go too much higher than where they are, I think. It's going to be interesting to see. Like, I mean, generally speaking, if you look at history, when they start cutting, they cut a lot, right? Because something's going wrong, something starts to fall apart. Usually the Fed cutting is actually the sign that it's about to get hairy. So I'm definitely I'm cautious. That's why I say, like, yes, the monthly chart on Bitcoin looks fantastic. It looks like it wants to go higher, and it probably will go higher, but it may go higher after it's taken a bunch of people to the cleaners. It's a very, very real possibility that's in my mind. And again, I honestly put it as a coin flip that we teleport to the next level, or we have to go through some serious chop. I mean, if you kind of envision it, if Nvidia cracks and suddenly countries start to fall, like, there's all sorts of things that can happen. It's just a very tenuous time. So simultaneously, I'm super bullish, and I'm simultaneously being like, God, anything could happen to this. It is hard to read.
Yeah, I think that's why it pays to have such a long-term mindset. Like, if you're new to Bitcoin, welcome, g'day. Like, it's so exciting. Please read the books. This book arrived yesterday, Parallel, and oh, absolutely, mate. James, if you haven't read this book, I highly suggest reading it by Brian Dimon. It's such an epic read, and it talks about this Bitcoin parallel economy, but basically what I'm trying to say is if you're new or you have been here for a while, instead of trying to think about getting rich in fiat terms, I feel like Bitcoin is the superior store of value, wealth preservation, but you just need to look out. Like, stack as hard as you can for 4 years and then just start saving in Bitcoin, and then have a time frame, 10, 20, 30,000 years, and forget about the rest. I'd like to lead you into what you're doing with OnChain, why you started it, if you've created YouTube to go alongside it, how that can maybe help people through these volatile events. Like, some people feel like it's a dirty word, the word shill, so we won't use that. I found a better word. Like just let people know what you're doing, and for me, like, give yourself a nice advertisement and how it can be beneficial to people.
Yeah, for sure. I mean, look, OnChain's kind of it's going out on my own, right? So I've spent a lot of time studying on-chain data, studying how Bitcoin markets move, and it's about experience, right? Some people have spent a lot of time studying markets, and most people haven't. And there's an opportunity there to just help people understand and be prepared for how things work, right? So, what OnChain, what we try to pitch it as is, we're your Bitcoin personal trainer, and the idea is, and I got this feedback a lot. When I used to do the on-chain videos at Glassnode, people would say, you help me hodl because I understand why things happen. I don't care that Bitcoin is down. I don't care that it's up, because I understand why these things are happening.
Yeah.
So it's very much about just helping people hodl, helping people understand the mechanics of why things happen. Some people, I mean, we do educational content as well. So we teach people how to actually understand what the metrics are telling them. So in many ways, it's like looking in under the hood at what Bitcoin is doing, looking at all the transactions and people, and understanding, what does it mean? What does all this stuff mean? And in many people think it's super complex. Actually, a lot of the concepts are very transferable. Once you understand the realized cap, all the other things make a hell of a lot more sense. So, we've got a Substack newsletter, right? And I'm firmly with you. We've got a charting website, which is free and will always be free. The Substack is paid, and we do most of our work behind the paywall, because I'm a big advocate for value, and I make the charts. I make the charts free and available, and a lot of my insights are baked into it. But the interpretation, which is my time and my expertise, that's what we charge for, right? So if you want to actually understand what I'm thinking about it, my opinions, that's what we charge for. And then we also have a YouTube channel, which we put out a portion, part one of our Monday report. We do multiple reports a week, but we do the first half on YouTube so that people can kind of see what we're doing and all that kind of stuff. And again, we try to give value, because we've obviously got to, we want to make sure that people are seeing what we're doing and they kind of understand. We want to give enough value, but we also have taken the approach that, all the good stuff is going to be behind the paywall. It's not super expensive, right? It's $20 a month. So we try to keep it fairly accessible, because, to me, helping people navigate volatility is actually, like, it's a passion as well. But at the same time, right, you got to put food on the table. So we've gone out on our own, and it's been fantastic.
That's so exciting. So I'll link OnChain. I'll link your new YouTube channel, and I've already put your X in the description as well. If anyone's got any questions, you've got about 1 or 2 minutes to be able to get those through. But you sort of touched on this earlier. I feel like it's going to get very volatile very quickly, whether it breaks this month or we go sideways for a couple of months. How do you think people should emotionally approach what could potentially come?
Yeah, it's a good one. I mean, it's, as you said before, right? If you're a DCA hodler, don't buy when everyone's taking massive profits. Maybe it's probably better to wait for us to get close to the short-term cost basis, right? It doesn't have to be on it, but just try and use some of these simple tools to just give yourself a bit of an edge, right? It's really important in a bull market to not FOMO. The most important thing, in my opinion, and especially in a bull, is to have a plan and stick to it. Have the plan now while it's not volatile. Think it through. Are you going to take profits this cycle? Are you going to use that money to finance a house or whatever it is you're going to do? Are you planning to take profits? Know when you're going to do that and what the conditions are, and stick to the plan. Don't change the plan on the fly, because the problem is that you're thinking about it now when it's calm. Your mind is able to process these things. Making decisions while the market's flying to the upside, you are going to be biased by the fact that it's flying to the upside.
Yeah.
You're going to miss the key information that actually helps you make a clear-minded decision. So probably the most important thing, have a plan, stick to it, and make the plan now while it's quiet, because once it starts moving, it's in both directions. Know what your conditions are for this doesn't look healthy anymore, right? If we're starting to move into a bear market, that's a big thing of what I'm trying to help my subscribers see, is like, what are the things I'm looking for when it's not a correction, it's the start of a bear. That's a really important distinction. And it obviously changes, right? Because your DCAs go to, now I'm just going to wait. I'm just going to let this thing calm down and reach that level later on.
Yeah, how interesting. With that, are you looking personally, and you go into this or not, to be taking profit this cycle and buying back in lower, or just using that to increase your purchasing power and your lifestyle? Or are you just going to follow the charts, DCA, and when it's no longer a DCA, just wait and then wait till next cycle?
Yeah, so it does depend where we end up going. But for me, the only thing I'll ever trade my Bitcoin for is another scarce asset. I'm not one of the lucky souls who's on the housing market at this point. I also look at it as a Ponzi scheme, so I struggle to bring myself to actually stepping into it. But I've been thinking about like the long term. What is your Bitcoin for, right? At the end of the day, it's your proof of work. And I've essentially come to the conclusion that there's basically two things, because you may have heard about the rule of three, which is basically like if you've got a family, your kids and then your grandkids, generally speaking, like the third generation is the one that pisses the money against the wall and destroys the business or whatever it is. It's very, very common, and it happens everywhere across the world. So when I kind of think about my own, what am I saving my Bitcoin for? I'm not saving it all for me. Some of it's going to be to give my future kids a better runway, right? So that's where a big chunk of it's going to go. And I'll sell that when I need it to service, whether it's schooling or whatever that kind of stuff is. I also don't particularly, as I've thought through this problem, I don't particularly want to save too much of it for the third generation, because it may well end up pissed against a wall. I think the better outcome there is to give your kids the best run that you possibly can with a nest egg. That to me is like the end result. But I also have to use some of that savings, some of my proof of work, to improve my life. So in terms of this cycle or next cycle, it will really come down to like when I'm actually ready to step in and buy something on the housing market. That's probably the only thing I'd trade my Bitcoin for. And then the rest of it is improving the runway for my family. And that's kind of the way I look at it.
Yeah. One last question. When we had our interview last time, check that out. Absolutely epic. I really appreciate having you on, James, and hearing your insights. You're still messing around? Are you still playing with gold?
Yeah, I've still got my gold in the share account. I can't remember where it would have been last time, but I've told the story.
Do you want to talk about like why you hold gold? Because a lot of Bitcoiners are going to get their panties in a knot about it. But
here's my unpopular opinion: a shitload of Bitcoiners are going to sell their Bitcoin for gold. Not all of it, but for the exact same reason that I own Bitcoin. That I own gold. It is a less volatile hard money, right? And at some point in time, let's imagine that Bitcoin goes. You wake up tomorrow and it's $1 million. I guarantee you there's a bunch of Bitcoiners out there that will sell a chunk of their corn and they will buy gold because they want the hard money trade. They don't want fiat. They want to stay in the hard money trade, but they don't want the volatility for some portion. Because for me, the reason I own gold, it's not cash, right? So it's not going to get inflated away. I believe gold is also going to go higher. And I don't want to sell my Bitcoin at a non-opportune time, right? I will sell my gold long before I sell my Bitcoin. So the gold's definitely getting sold, but I know it's going to be, plus or minus 20%. It's not going to be down 85% and I'm going to be sad selling it, right? So it's the same trade, but less volatile. It's doing my job. It's doing its job of preserving purchasing power. Bitcoin grows your purchasing power, right? and there is a portion of your portfolio that you just want to preserve. You don't necessarily like a lot of people aren't that greedy, right? They kind of get to a point. It's like, I just want to hang on to what I've got. And I think that gold is going to serve that purpose for a lot of Bitcoiners in the future. And it's the same thing, right? If I need to tap liquidity and I can't get it out of any other asset, I don't want to sell the corn, but I can use the gold as that like liquid asset that's available for me.
Yep. And are you holding that in physical bullion, or is that on the stock market?
No, it's an ETF. And the beauty there, right, is that you don't have to worry. Again, it's got all the flaws of gold, right? All the flaws of it being custody by someone else. But I thought through this, and yes, I could get physical, but then then it's a real pain in the ass.
It's a hassle, man.
Exactly. It's shit. So the problem is that I can see if there was ever an environment where the physical gold was actually like, let's say the government seizes your gold shares, my Bitcoin's going to offset that, right? It's going to moon mission. So at the end of the day, I'm already hedged for that environment. And therefore, I would rather have the liquidity and the access and not worry about the physical bloody metal in my house. It's just easier to move around a stock account, and that's just the way to do it.
Yeah. So one more question, last question. Is it like these ETFs, there's so much money that has come into it since, they really are scooping up a lot, $1 million. Is there any part to play for people? I'm dead set against the ETFs, but maybe I'm willing to hear like your opinion on it. Should people strictly hold Bitcoin in self-custody, or can the ETFs be beneficial for an individual or for a unique cohort? Like, is there any benefit? I see none. I see zero benefit. I think it's idiocracy.
No, there's loads of benefits. And I think maybe another unpopular opinion, self-custody is very important, but it ain't for most people. The vast majority of human beings will not self-custody, and that's okay. And I think the sooner that we as Bitcoiners come around to that as a reality, I think the better off we'll be, especially in terms of the way we design our technologies. Most people aren't going to be full self-sovereign. They don't want that level of responsibility. So it's one of those things where we can keep yelling and screaming and saying, no, you need to self-custody. And what you're going to end up doing is just having less people buy it. That's just how it's going to work out. And it's one of those things where it's like, you have to understand the market. Like if you go down the route of like a product management type approach, if you keep shilling a product that nobody wants, it's just not going to happen. So self-custody is very important. The right to self-custody is very important. And if you are able to self-custody, you should, right? I self-custody. I think it's the right way to do it for me. However, you also have to think about it from another angle. If I died, could my loved ones get my coins, right? A lot of people, the answer, like you may ask your significant other to go through the test and say, can you please spend one of my UTXOs? And
which they should.
They should. And a lot of people will be horrified at the result, because we as Bitcoiners spend a lot more time thinking about our Bitcoin and what it's worth, what it means to us, our proof of work that's gone into it, and how we custody it. We've thought a lot more about that than everybody else. So when you ask that everybody else to get access to it, you can end up where you're the biggest enemy. Right. So I think there's a lot of things that are going to evolve in the future. I think we're going to see more federations, right? Bitcoin banks, I think, are going to be a thing. And I also think that things like multi-sig custody, multi-party custody is going to be a massive part of Bitcoiners' futures, because if Bitcoin 10x's from here, you're not talking about chump change anymore. You're talking about life-changing generational wealth. So as a result, hiding it in a metal plate in your backyard, right? Guarded by Gollum, who you've got to answer 5 riddles before you get access to your seed phrase. It's not a practical or real thing. I think Bitcoiners are going to start thinking, lower their time preference and go, oh shit, I'm mortal. What happens if I'm the actual problem? And that's the challenge with self-custody. You can actually be the biggest problem. Most coins are lost, not because of hacks, but because some guy forgot his own goddamn passphrase, forgot where he put it, right? So we can actually we can be our own worst enemy in that regard.
So I can already see the comments firing off there. Elaine, I have to disagree. Bitcoin changes people. Bitcoin without self-custody isn't Bitcoin. I think you're saying as well, like self-custody is the right way to Bitcoin,
Correct.
but being realistic,
Pragmatic.
yeah, being pragmatic, realistic in things. Like the people that are here now with Bitcoin are the people that are awake, that are aware, that can see everything, that are willing to put in the proof of work. Other people are so busy living their lives. They would be much better off learning about Bitcoin, reading a few books and taking Bitcoin self-custody. But realistically, it may not happen. Like I have these not arguments, but conversations with my wife. I'm like they have to do it this way. And she's like, they're just not. Like it's too hard. It's too hard for a mum, and then I can take the time, obviously being that Bitcoin person, but not everybody has that in their lives, which is, it's a shame. So I don't think, people are getting a little bit triggered. I'm not sure if you're advocating for the ETFs. You're just saying like, that's just a fact of life. That is just going to happen.
Correct. No, exactly. As I said, if you can self-custody, you should. But you should also self-custody in a way that makes sense, right? And think about inheritance. Think about what does it look like in the future? All of these things are true. But also recognize that we are getting closer and closer to saturating the cold card market, right? There's not that many people who aren't already into Bitcoin that are going to use this stuff, right? In terms of a seed phrase and all those kind of mechanics. A lot of people just want to own it in their share account. What's really cool actually is the new monochrome ETF in Australia, because you can withdraw. That's super cool. That's a made, because some people will get there, they'll understand it. They'll buy it in the ETF first, the same way that you buy it on Coinbase or Binance first. And then over time, you move from, oh, I kind of get this. Wait a second. I'm actually going to withdraw these coins. I'm going to hold it properly. And then, as I said before, I'm pretty sure that Bitcoiners who are currently self-custodying, your setup will probably change too, because you'll start thinking about inheritance and multi-party custody and all that kind of shit. Like self-custody also isn't the final step. There's steps that are going to come after that as well, right? And this is what Peter Dunworth's been doing with Bitcoin Advisor and Andy. It's a great idea. It makes perfect sense. So I think getting stuck on, you got to hold your own keys. Yes, but also think about there's a lot of dynamic components and it's a journey. That's a part of that journey.
Yeah.
Not everyone's going to go down that path, right? And that's okay. Some people will, some people won't. Making sure we still have the option is super important, right? Because you're right. You need to be able to withdraw the coins. If you can't withdraw the coins, then we've got gold, right? That's the key factor in all of this. So yeah, it's just about being pragmatic and realistic.
Mate, so interesting. For everyone watching, it's been such a pleasure. Hit the subscribe if we vibe. I'll put all James' links below when we get off the call and have a bit of a banter afterwards. But it's been a pleasure. Thank you so much, as always. And I really would recommend everyone go there. And if you're triggered about the gold or about the ETFs, hit James up on X and get into an argument with him and vent your frustration there. Mate, been an absolute pleasure. Thank you so much. For everyone watching, do something nice for yourself, for somebody else. Have a beautiful day. Be blessed. Peace.
Good on you, mate.